This podcast is brought to you by Reynolds and Reynolds. There are 3 waves of AI transforming our industry. Explore what they are, where AI technology is headed, and what these emerging innovations mean for automotive retailers at rayray.com/AI-waves for more info.
Welcome to Daily Drive for Thursday, June 25th, 2026. I'm Jake Neer in Detroit, in for Kellen Walker. Today on the show, unless something changes, Polestar will soon be out of the U.S. market. Hybrids are quietly taking over, and analysts say they're only getting started. And Ford makes a quality comeback, at least when it comes to one important metric. Plus, Automotive News Asia editor Hans Greimel joins us from Tokyo to talk about the chaos at Nissan's shareholder meeting this week.
Another motion out of the blue to vote on reappointing Carlos Ghosn as a director to the company, kind of outlandish requests and ideas that just kind of really tried to blow Ivan Espinosa off his message.
Let's run through all the news you need to know to keep up in the auto industry. The Trump administration is forcing Polestar out of the U.S. market, starting with model year 2027. It denied the Swedish EV maker authorization under the connected vehicle rule, which restricts cars with Chinese-linked technology over national security concerns. The rule was adopted under President Biden and kept in place under Trump. Polestar is majority owned by China's Geely, and only 6% of its first quarter sales came from the U.S. anyway. CEO Michael Lohscheller says Europe is now the company's primary growth engine. Ford and other automakers are scrambling to secure their own authorizations under the same rule. Hybrids are quietly taking over big portions of the U.S. auto market. Cox Automotive says hybrid vehicles hit a record 14.1% share in the first quarter, up from 11.9% a year earlier. That makes them the fastest growing powertrain on the market. Alex Partners forecasts that share will climb to 34% by 2030, as gasoline-only vehicles fall from nearly 3/4 of the market to just half. The shift is being driven by higher fuel prices, the end of federal EV tax credits, and a growing lineup now spanning 49 nameplates across 12 brands. And GMC is revealing the redesigned 2027 Sierra 1500, and it's going all in on luxury. The overhauled pickup gets a sculpted exterior, a revamped interior, and new 5.7 and 6.6-liter V8 engines. It goes on sale late this year. The timing matters. The Sierra and Silverado together accounted for nearly a third of GM's U.S. sales in 2025, making this redesign critical as GM absorbs tariff costs and electrification investments. GMC declined to share pricing or performance figures, saying more details are coming. And those are today's headlines. You can find more details on all of those stories at autonews.com. Ford has pulled off a major quality comeback, at least for one metric, after setting an industry record for recalls and ranking just below average last year. Ford surged to become the top mass market brand in the 2026 J.D. Power Initial Quality Study. Porsche took the overall top spot, followed by Genesis. Ford COO Kumar Galhotra credited years of changes, including more rigorous testing, 350-plus new technical specialists hired since 2023, a new software quality team, and a supplier accountability program led by supply chain chief Liz Dorr, with Turning the Tide. Here with me to talk more about it is Michael Martinez, who covers Ford as well as the UAW for us at Automotive News. Mike, welcome back to Daily Drive.
Hey, Jake.
All right, Mike, so make this make sense for me. Ford ranked 23rd in this study just 3 years ago, set a record for recalls last year, and now it's the top mass market brand. How do we square that?
Well, IQS obviously is measuring reliability after 90 days of ownership once somebody gets a brand new vehicle. And Ford's making the argument that recalls are a lagging indicator, that many of these recalls happen on older models that are at least 1 or 2 or 3 years old. And they're saying they put all these new processes in place on their newest models, the stuff coming out today and beyond, and that as the sort of group of vehicles that are on the road today ages and the older ones phase out, you're going to see those recall numbers start to drop because of everything they've put in place. But obviously, the recall numbers are horrible, but what Ford has been able to do on IQS is pretty impressive.
Yeah, one of the things that seems to be hurting Ford here, at least I assume, is hurting everybody, right? And that's infotainment. So is this a Ford specific thing, or is this an industry-wide issue?
It's an issue that is plaguing the industry and has been for as long as I've been covering this stuff, year in and year out. People complain about the touchscreens. They complain about the infotainment systems. They're not all intuitive, even a decade on for when they were first introduced, or at least introduced in their latest iterations. Touchscreens can be difficult to navigate, particularly while you're driving. If you have to go 2, 3, 4 layers deep to find the control or the function that you really want, the study found that 46% of owners who complained about distracted driving problems said those problems were a result of fiddling with an infotainment screen. So the study is making the case that simpler is better, that the less automakers sort of pile into these screens, the more intuitive they make them to use, the better off their scores are going to be.
Well, Mike, you and I will be on this week's Weekend Drive edition of the show, along with our own Larry Velaquette, and we will talk some more about this as well. There's some interesting nuggets in your reporting. So if you're listening to this, make sure that you check out Weekend Drive, available Saturday morning. Michael Martinez, great as always to have you here on Daily Drive.
Can't wait, Jake. I'll talk to you tomorrow.
Coming up, Automotive News Asia editor Hans Greimel joins me to talk about a very messy shareholders meeting for Nissan this week. That's next on Daily Drive.
3 waves of AI are transforming our industry as we know it today. Hear from AJ McGowan, Vice President of Research and Development at Reynolds & Reynolds, on all 3 waves of AI in automotive, where we're heading, and what the latest cutting-edge innovations mean for automotive retailers.
So I want you to picture what it would be like on that same Tuesday morning that we talked about earlier with a full agentic infrastructure in place. Your service manager wouldn't start the day by reading reports. Ray hands them 3 ROs that need attention and tells them why. Your sales manager wouldn't spot check calls. Ray already routed the ones that mattered. The GM doesn't reconstruct yesterday. Ray reconstructed it overnight and gave them a summary. And your controller doesn't have to pull the deal level analysis every Friday. Ray runs it on Thursday and flags anything that's worth a conversation. Decisions can get made earlier in the day with better information by fewer people. And that's what the agentic wave actually feels like in your store. It feels and sounds a little bit like science fiction, but at the end of the day, it's not. It's just a faster Tuesday.
If you're interested in exploring how AI can improve operations at your dealership, visit rayray.com/AI-waves. That's rayray.com/AI-waves.
Welcome back to Daily Drive. I'm Jake Neer. Nissan's annual shareholder meeting this week was unlike any you'd typically see at a major automaker. CEO Ivan Espinosa fended off a no-confidence vote, a motion to remove him as meeting chair, a shareholder proposal to reinstate fugitive former chairman Carlos Ghosn to the board, and a rare rebuke of a company-backed director nominee. This is all while Espinosa is trying to make the case that his turnaround plan is working. Automotive News Asia editor Hans Greimel covered it all from Tokyo. I spoke with him earlier this week. Hans Greimel joining Daily Drive from Tokyo. Hans, always great to have you on with us.
Thank you, Jake. Great to be here.
Bring our listeners back up to speed. What was the mood like, and what was the reaction to this sort of shareholder? Is revolt the right word, Hans?
Well, I don't know if it was a complete revolt, but there were a lot of angry voices in the crowd at annual shareholders meeting with Nissan. Shareholders there have been in disarray and kind of a disgruntled bunch for several years now. It really started in 2018 with the arrest and ouster of Carlos Ghosn, the former chairman there. And Nissan has had a rough couple of years ever since, rough several years actually, since almost 7 years now, since the arrest. The stock price is down about 66% since right before Ghosn's arrest. The earnings are down. It's got a net loss this year. It's struggling to sustain sales. Sales have slipped several years of the last several years. It has trouble getting volume back on the upward trajectory. So there was a lot to complain about, and they weren't shy in letting the management know about it.
I wanted to ask you about this vote against Moto Nagai. Seems like a pretty direct rebuke of Nissan's board. Proxy advisors were flagging independence concerns related to him. How significant is it that Renault, Nissan's own alliance partner, reportedly abstained from that vote?
Well, it's unusual, that is for sure. Under the old arrangement that Nissan and Renault had when they were close alliance partners, it was agreed that Renault would always back the candidates offered up by Nissan for the board. Then they rewrote the rules. 2023, two companies kind of went their separate ways and dialed down their cross shareholdings and kind of branched off from each other. And now Renault doesn't have that obligation to automatically back any candidate that Nissan puts forward. So you saw them here kind of exercising Renault, that is, exercising their influence or their independence, and they're the only clout they really have over Nissan by abstaining from that key vote here. It's unusual because, Renault now used to have over 40% of holding in Nissan and, nominal control over the company. Now it only has 17% and its voting rights are limited to 15%, and it has no members represented on the board anymore. So this is the only way that Renault can kind of exercise some kind of influence over the board. So that's one aspect that we're kind of seeing here. Another is just a general concern about in modern day governments or corporate governance circles about corporate independence of the board, or having a real, truly outside, external, independent director. And the reason there were some doubts about this is because Moto Nagai comes from, he's a top senior executive at the Mizuho banking group, and that is one of Nissan's top institutional banks. So it's not seen as being completely independent of Nissan. In fact, it's seen as being kind of in the same camp. It's a client of Nissan's. So that's raised concerns among international proxy groups who are advising to vote against Moto Nagai.
And does losing that seat change anything structurally for how the company governs itself going forward, do you think?
Well, it eliminates a little bit of influence from the Mizuho group. And that's significant here because there's another new director who was appointed to the board or recommended for the board who also comes from the Mizuho group. So there would have been, had all the directors been voted in by shareholders, there would have been two people there from Mizuho on the board. So it kind of restores the balance that used to be there without completely eliminating Mizuho. It restores a little bit of balance that was there. But still, there were questions about having even one of the Mizuho representatives there at all. Now, I might add another question mark looming over Nagai, or a couple more, were that he was the statutory auditor during the Carlos Ghosn scandal. And some people criticize him or accuse him of being in the camp that was kind of plotting against Ghosn and orchestrating his removal. And then he is also seen as being kind of a pro-Honda Nissan merger director, because he comes from Mizuho, which was a financial institution that was supportive of the idea of merging Honda and Nissan. That was a merger that came together in, it must have been December 2024. And then it blew up spectacularly in February of 2025, less than two months after the thing was took off. Anyhow, So he was, even though he was on the board at Nissan, he was supporting that idea, is the thought. And there was maybe some questions about that. Perhaps Renault didn't like the idea so much of combining with Honda, so didn't necessarily support the idea of having too many defenders on the board.
Before I let you go, Hans, I do want to ask, this was my initial reaction to your story here, that, the midterm plan's still months away, and Ivan Espinosa's re-Nissan, recovery plan, turnaround plan, hasn't really had much of a chance to show any real results. So, for one thing, investors are already upset. How much does that plan, and how well did Ivan Espinosa do in sort of addressing these concerns during the meeting?
Well, I think he laid out the accomplishments that he's made so far in slashing fixed costs and variable costs and things like closing factories and reducing headcount and kind of rebooting the product pipeline, if you will. He's really taken a lot of measures in just a short period of time, basically 1 year in office now. He's taken a lot of measures that previous CEOs just wouldn't take. They were too severe or too hard. And he bit the bullet and he did it. So he was not shy about talking about those successes. And then he was also very clear about explaining his roadmap going forward and his vision for finishing out the midterm plan, the revival plan, but then also taking next steps. What to do beyond that is just shifting into the growth phase, as he called it. This fiscal year goes through the spring of or March of 2027. He's predicting at least that global sales will increase again for about almost 5% to 3.3 million. Now, that's very low when we think about Nissan historically, but Nissan's sales have contracted for 7 of the last 8 fiscal years. So it's imperative that he gets that volume going in the positive direction, and he thinks he can turn it around this year. So that's one thing that he was trying to impress upon the shareholders there.
Any other big takeaways for you personally covering this this week? Is there anything to look out for in the future?
Normally, in the past, some Japanese companies and car makers, their shareholder meetings have been a bit bombastic and lots of fireworks. That's kind of a tradition that goes back decades. But in recent times, especially in the auto sector, the affairs are pretty scripted, pretty boring, dry, and well-behaved affairs. If we compare Nissan with Toyota's was like a love fest last week when they had theirs. Very dry, very softball questions. Everybody was happy. The new CEO, Kenta Kon, was choking up on stage, talking about his sense of responsibility, and the crowd was eating it up. And, it was a dramatically different picture at Nissan with people shouting and interrupting and screaming, and Ivan Espinosa having to act as diplomatic as possible and repeatedly answer the same question and take field motions to remove him as the chairman of the meeting. And then, of course, another motion out of the blue to vote on reappointing Carlos Ghosn as a director to the company, kind of outlandish requests and ideas that just kind of really tried to blow Ivan Espinosa off his message, but he really stuck to it. It was tough at times, but he got things back on track very diplomatically, and he was able to finish off with his message of growth and future oriented strategy. So in the end, I think it was a success for him.
Hans Greimel joining us from Tokyo. Thank you so much, Hans. Really appreciate it. It's always great to have you here on the show.
Thank you, Jake.
That's Daily Drive for today. I'm Jake Neer, in for Kellen Walker. Thanks to automotive news journalists Michael Martinez, Vince Bond Jr., and John Irwin for their reporting for today's podcast. You can get the latest news on Nissan, Polestar, the hybrid surge, and everything happening in the auto industry at autonews.com. Come back tomorrow for a conversation with Cox Automotive Chief Economist Jeremy Robb on his mid-year outlook for the auto market, including what a potential rate hike, the Middle East conflict, and USMCA renegotiations mean for dealers in the second half of 2026.
Consumers have had to use a lot of their extra money to go and spend on higher gasoline and things like that. But even in the face of that, we've seen resiliency in the auto market from sales trends.
We'd love to hear from you. Let us know what you think of the show and the topics we covered today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoy the podcast, remember to like, leave a review, and subscribe so you never miss an episode.